what you can learn from the firm, which since founding in 1996 has invested more than 244 billion in private markets. Yes, it might be like a crazy number, which it obviously is, but if you look at the people behind this company, it's three guys with a clear vision to build something remarkable. And in their case, in 1996, their goal was very simple, to do an independent asset management for entrepreneurs. So I believe you are an independent searcher, you run a fund, or you want to run a fund, you buy businesses, you invest in businesses, or you're just in a very early days of all this. There's so many lessons in this, because like yourself as well, one of the founders of the Partners Group, Urs Wietlisbach, he said that stocks and bonds are boring. We are entrepreneurs. We want real assets. So we decided to went into private equity. And again, today they have 174 billion US dollars assets under management. But it all started from somewhere. And when doing research on them, Urs said that I always wanted to be independent. That was my goal. I always wished to start my own company. So the wild part, they were in their early 30s. They went and raised, without any track record, they raised 450 million Swiss francs, which is pretty much the same like US dollars. So around 450 million US dollars. And doing research on them, like when asked, like, who is a good entrepreneur? A good entrepreneur knows where his weakest spots are. Nobody is perfect. A good entrepreneur knows his weaknesses and gets the best people for these weaknesses and gives them shares, hopefully, so that they are incentivized. We had a big advantage that we were three founders and we were so different. And if you bundle us three together, you have this perfect entrepreneur. And when it comes to friendship, we don't do much together. We are just so different. We don't have the same interest. So three co-founders of the Partners Group, Marcel Erni, Urs Wietlisbach, and Alfred Kantner. And you can see it's not the friendship. They don't do much things together because they're so different. But all together, they make this perfect entrepreneurs. So we are strong colleagues in business. We trust each other completely. But before founding the investment firm, they were all working at Goldman Sachs. So what you believe was the right time and right decision to leave Goldman Sachs? It was an interesting story as he has just secured himself a very healthy commission when working for Goldman Sachs. And the very next day, Marcel invited him to a coffee and asked whether Urs would be interested in starting a company together with him and Alfred. Obviously, Urs was like, come on, guys, you're crazy. Goldman at the time was really the absolute best place to be. But still, they decided to leave their very well-paying jobs. And Urs was the oldest and had the most money, 200,000 US dollars at the time. And as there was no point in sitting in the office together, every bit slow, there is just no point of three guys just sitting in the office. What they decided to do was they made a commitment that Urs invests $200,000 and joins 18 months later as an equal partner. So when should one leave and start their own business? Urs said that people working for very large companies in early stages of one's career, there's a thing which you should secure your backpack, as he said. Do everything you can, be super curious, ask a lot of questions, because you never know what you will do in the future. So learn. And working for a very large company, make sure you don't get comfortable. Have the courage to leave. Because when they left, it was very crazy. Crazy decision for them, crazy decisions for their families, because life was very good. Very great salary, tons of upside. And Urs said that his father said, you're completely insane. You're now on Goldman. You're on commissions. It's always like your own business. But it didn't matter. They still decided to leave. So the biggest mistake they've made when starting Partners Group, there is a guy who came in their office during their fundraising and who said that they will help them bring 1 billion in AUM. And Urs said They were so stupid, or the guy was just a so great salesman. Anyway, none of the three founders pay themselves anything upfront, but this guy came in and said he needs upfront, and only then he can start closing deals to bring capital. So the story there was that they paid him 120,000 Swiss francs in cash, so $120,000 in cash. They went to the bank, they took the money in a plastic bag, and eventually the guy was gone and took the money, he was gone. This was a very expensive mistake, but they said that this made them extremely careful for the future opportunities. So fast forward in 2006, Partners Group did an IPO. And the reason behind this, Urs said, was we were three young guys. We needed employees. So the very first 150 people they hired in the early days, they said they were all half entrepreneurs, as it's going to be 30% lower salary than their previous employer. Hey, I want to tell you about the very exciting sponsor we've had for some time on the board. It's called CapitalPad, and it is the thing that I know a lot of people wished for when they started their own journey of operating and investing in small businesses. And we can even say the same thing about the Partners Group, the guys who founded it. Early days, today, all they need is they need great deals. So in your case, obviously the deals are a bit smaller compared to the Partners Group, but today's sponsor, CapitalPad, it's a marketplace for acquisition entrepreneurs. That is for people who want to buy a business and need capital to list their deals and solicit capital from other people who want to invest in acquisition deals. So if you want to back somebody buying a business, CapitalPad is the place to do it. And if you want to buy a business and need capital, you can go to CapitalPad to be introduced to investors. So I'm very excited that this platform exists. It's founded by Donza and Travis. Also, Donza was a guest of this podcast. He has closed 2 acquisitions himself so far. So if all this sounds appealing to you, and if you want to buy a small business and you need capital, or if you want to invest in small businesses, go check out capitalpad.com and tell them that Mick from Holdco Builders sent you. That's capitalpad.com. And now back to the episode. And some folks actually came from Goldman and got 70% lower salary, and they were fine for that. And the first 3 partners, after them, well called B partners. High-level guy who was running the whole UBS in Southeast Asia out of Singapore. Then the other was head of credit asset management in Frankfurt. And all of them were in really high ranks. And all of them were very much older than them. So they paid those high-level people 120,000 Swiss francs per year. And they gave them a few shares. Who got 0.5%, who got 1%, but all of them got shares. And that made sure that these people have to believe that the firm will be worth something big in the future. So they had a 5-year cliff vesting period. The people who said no in the beginning and not being okay with the lower salary, they just didn't attract those type of people because they wanted to have those half entrepreneurs who will be extremely excited about the future share price of the company. So the whole goal was to get entrepreneurial thinking people, and their only sole goal was to make sure that everyone had shares, and even the receptionist, because then you have those motivated people, even the receptionist. And then people always ask, like, what are those shares worth? So that's the decision. That's why they decided to go to public. That's why they decided to go public in 2006. Then people saw that what they could lose if they leave. The second reason, they then started going much more toward direct investing. And before that, they did fund-to-fund and secondaries, but they now went much more direct and actually started acquiring businesses. And the third reason, in Asia, being public gave a completely different level, like talking level. It didn't change much in the beginning. They said they are a private partnership with a public listing. They also said to employees, no need to watch the share price. Who cares? We are here for the long term. And they had a long lockup, so who cares what the share price does today? They did half a year reports. They said they don't care. The quarterly reports are for others. And of course, now it's different. People have sold shares. Now it's a proper public firm with a market cap of 30 plus billion US dollars. Of course, now it's totally different. People have sold shares, and now it's a proper public firm with a market cap of 27 billion US dollars. An interesting side note, in their office, in the Partners Group office, they have a quote on the wall: "We are responsible for dreams." So why is it important to understand this? It's important for their investment professionals to know why they actually work. It's not the share price or the carry, but at the heart of their work for pensioners, the majority of the money they invest is from pension plans. And they need to understand that, I'm quoting Urs in here, if they fuck up, as he said, they take away the dreams of those pensioners. And the biggest coupon so far, a mandate they have, is 6.6 billion from a single pension fund. Now let's get more specific, and when it comes to the due diligence, they often do all the due diligence and post-acquisition work even before the company is for sale. Then they're really hoping that the bank or an intermediary or an M&A boutique will come along and say the company is now for sale. They then have 4 to 6 weeks to make a final bid, and Urs has said that we kind of know what might be for sale sooner or later. I don't know how the others are doing the due diligence in 4 to 6 weeks. We have been working for a year or longer on the transaction by then. And when it comes to his role in Partners Group today, Urs said out of 3 founders, he's responsible for client relationships. He's the guy who gets the money in. And of course, now things have changed. They have more than 100 to 120 people on the marketing team. But till this day, he really enjoys client meetings, convincing clients. He says he really enjoys talking, and he believes that what he does is the best work. Now, when it comes to the private equity model, which they follow in Partners Group, he also said that there used to be times where you could use 3% equity and 97% debt, but fast forward today, this is not the case. Their portfolio average is 53% equity and 47% debt, and today they don't make money with leverage. These times are over, as he said, and you also don't make money with multiple expansion, buying it cheap in a private market, selling it in public. Today, the performance comes from the business concept as you manage companies. The average EBITDA growth on a group level, they own 90 of such companies at the moment, has been growing 15%, 1.5 year over year. So if you grow your EBITDA 15% year over year, you make good money for your investors. Next is that what makes Partners Group so special and better than competitors? Urs said not too many funds are doing it, but it comes down to the proactive deal sourcing. A lot of industry is still waiting when the investment banker calls, says we have now auctioning a X, Y, and Z company which is up for sale. Not saying there is no competition, but these days when a company is worth more than 50 million, nobody sells a company without the intermediary, M&A boutique, or a bank. But the difference is when the bank book comes, we have already worked on this for 18, 24, 36 months. There was a very big transaction in Germany, a company called Techem. We knew the competition was big, so when the bank book came, they were the only big player who had worked for as long as 582 days on the deal. They have a deal log, so they know exactly like how many days they've been working on each deal. And this was 582 days already before the company was even for sale. And in this case, when the bank book came, the deal was already on their global investment committee. They had already talked to the management. They knew this was going to become for sale in the next 2 to 3 years. And this is their benefit. They have a team who does all the work, so they know that companies might come for sale. So when it comes for sale, they know everything. They know the management knew them, they had a plan with the management, they had told them that what they wanted to do with the business. So working on many transactions long before they do them, this gives them a great advantage, because imagine they've been working on a deal for years and then comes someone who has done it for maybe 2 months. You can already say like who's going to win. And all this requires a lot of time, a lot of people, And Urs said, yes, as company owners, we wish to be more effective. Partners Group has the most investment professionals per asset under management. It's because they do these more structural extra mile activities, and this requires extra people. This seems to be working well because they did research on returns, and when it comes to the big private equity firms, the well-known only Bravo has been doing better. The rest, CVC, Blackstone, Apollo, are behind in terms of returns of the last 3 funds. And what type of industries do they like? Obviously, the ones which have strong tailwinds. This is something Urs mentioned so many times. You have a great company, a great industry with strong tailwinds, but you have a bad management, and management is more than 50% of the returns. Picking the right management, incentivizing them the right way, that's almost an art. Also, figure out if you have the wrong picks, which also they've done in the past. Then you need to change this very quickly. We don't only have glorious things, we also had not so good companies. We found a way to turn it around, but it took a lot of time and a lot of effort, and it's very expensive if you make these type of mistakes. So what about the great opportunities in PE? We don't like cyclical industries in this environment and this time, what we are at this moment. We like a lot of things with health, aging, this area. We also like servicing companies, software servicing. But when you ask where the most transactions are going to happen, it's healthcare and business services. Today's episode is brought to you by ETA Europe, the easiest way to stay on top of Europe's fastest growing ETA scene. Get the weekly hit of acquisitions, analysis, and market shifts from search fund raises to the investors backing deals. So if you want the inside track on ETA in Europe, this is probably the best place to start, because the guy who's running this, has bought many companies and has sold his own business for hundreds of millions. So you can subscribe for free. I'll put the link in a description, and whenever you sign up, just let them know that Holdco Builders sent you. Now back to the show. Now, when it comes to this thematic research, which I shared before, and the very interesting concept in Partners Group, before they even know in which company they want to invest, they have 4 industry teams who do constant research. Number 1, healthcare team. Number 2, IT team. Number 3, goods and products team. And number 4, servicing team. An example about the healthcare industry. In 5-6 years ago, United States changed the health insurance regulation. It was about an example about the healthcare industry. In 5 to 6 years ago, United States changed the health insurance regulation. It was about physiotherapy. Before, they were no covering physio. Then they started to cover physio. Plus, they even forced it to do physiotherapy. It's even more interesting as people in general are getting older. The healthcare team in Partners Group were right away like, this is very interesting place to be, as the 50 largest physiotherapy chains had only 20. An example about the healthcare industry. In 5 to 6 years ago, United States changed the health insurance regulation. It was about physiotherapy. Before, they were not covering physio. Then they started to cover physio, plus they even forced it to do physiotherapy. It's even more interesting as people in general are getting older. The healthcare team in Partners Group were right away like, okay, well, that is very interesting place to be, as the 50 largest physiotherapy chains had only 12% of the market share. Very fragmented market. They then were looking at 2 companies, and finally one of them came to market. It was for sale. Then the bankers came and gave Partners Group the bank book. Here we go. You have 4 weeks to make a final bid. They were prepared. They had all the research done. They had the management in place. They had the IT systems pretty much ready to install. So the management knew exactly what to do with the company within the next 5 to 6 years. When they invested, the company did 38 million in EBITDA. 4 years later, it did 110 million in EBITDA. Substantial increase. They've invested a lot. They used to have 100 clinics. It's now 600 plus clinics. 4 clinics in Phoenix, 5 clinics in Miami, etc. They bought them all for a low multiple, around 4 to 6 times. Then they have put a lot of money into digitalization, all upfront, to really create those great systems. So whenever they acquire a new clinic, they just have to plug and play. Since 1980s, private equity has outperformed public market for about 4 percentage points. Urs very strongly believes the only reason for that is that private equity knows everything about the company at the time of an investment. If you know as much as we know in public firm, you should not invest because you could go to jail, because you would be an insider. The more we know, the better we invest. Second large thing, everybody is much better incentivized. This has nothing to do with leverage. Yes, leverage helps, but we don't over-lever. And to be even more clear, we have performed public markets even more than 4 percentage points over the past 10 years. And to achieve that, you need to find industries which have a lot of tailwinds. You can have the best management in an industry which is dying. There's not much you can do. Obviously, it's a super competitive market, but as you said earlier, this is why they have those 4 thematic research teams. Again, healthcare team, IT team, goods and products team, and servicing team. We want to be the first when it comes to specific industry, and we want to be the first to find the best companies in those industries. So how is the team compensated? Simple. You eat what you kill. Those who are deal makers only do that. You don't look right and left. They have a thorough system. Thematic research, the whole team, they work together. It's a team effort. They share the carry with the different teams. So their private debt team gets part of the carry of the direct equity team. The real estate team gets a little bit of carry because sometimes a private equity deal has a real estate angle. Sometimes you do sale leaseback and such things. Team of knowledge. 40% of team members are people with financial background. All the rest are coming out of industries. They hire people out of consumer industry. For example, their new head of private equity is an ex-CEO of German automobile company DY Friedrichshafen in Germany, a global technology company that supplies systems for passenger cars, commercial vehicles, and industrial technology. This company had like 250,000 employees, and they got the specific person from there. When it comes to compensations, they expect their senior managers to be part of each deal. They are big believers in sweat equity. They do not pay high salaries, but the managers are involved with shares in those businesses. If a company does well, they will all get rich. We have CEOs where they make triple-digit millions. They made 100 million and more out of investments, but they made us, Partners Group, 6-7 times our money. One more story, when doing large investments in a company, very often they have a chairman coming from the industry. For example, a company called PCI Pharma Services, a pharmaceutical outsourcing company where they made 4 times their money. The chairman of this was Franz Homer, who was longtime CEO of Roche, which is one of the largest pharmaceutical companies in the world. This is the type of caliber they take in, and Franz put a lot of his own money into this deal, into PCI, when they took over the company to him become a chairman. For the management, having a chairman who's on the real big guys overseeing the management together with Partners Group, people on group, all this is very helpful. For the management, having a chairman, ones who's like a very big guy overseeing the management together with the Partners Group, if you put all this in place, this is very helpful and very powerful. And to sum up, asking from Urs, what do you think makes entrepreneurs successful in so many areas? He's about being a generalist, seeing so many things, being a strong generalist foundation. You want to gather a lot of information, and it's about everything, not just about a specific thing. Without wanting to sound high-nosed, I understand a lot of things out there, but I've never been a so-called specialist. A little bit of selling private equity, that I consider myself a specialist, but besides, I wouldn't say I'm a specialist. The thing is, you gotta get the right people. You coach them right, you incentivize them right, you oversee them well, you fire them if they're not good, and in the end, it's a people's business. Each business you take, it's business. Each business you take, it's people. And when it comes to getting a wide knowledge base, be curious, read a lot, ask a lot. Young or old, take advantage of living abroad, studying abroad, working abroad. For others, he used to be this super annoying guy and always asking people to having a lunch, having a dinner, asked all sorts of questions. Everyone was like, it's you again. You always ask so many questions. But he said he didn't care. It's important not. Make sure you prepare yourself and read before you're going to ask anything. Get the knowledge first and then go add additional questions. It's a game of strength and weaknesses. Work on your weaknesses, but you never get them away. I'm really bad at details. I'm really bad at writing. To this day, my emails are not the best emails. I can convince people. I'm really good at sales, and I can get people very excited. This is my strength. So that's it. I really hope you learned a thing or two from this episode, from the founder, the notes of the founder of the Partners Group, Urs Wietlisbach. Because, again, as I said, if you're running a fund, if you want to run a fund, if you raise capital, if you buy businesses, if you're an independent sponsor, if you want to acquire businesses, or if you're just in the very early days of everything, I hope you learned a lot from this, because I did. So thanks a lot for listening. If you're first time in here, make sure you subscribe, make sure you follow, and see you in the next episode.